And welcome back to the Mortgage and Marketing Update. I'm Brian DeMarie, loan originator with Union Home Mortgage. I'm going to talk about inflation and the Consumer Price Index. Both those numbers are back for August and July. Numbers are up a bit, and we want to be cautious that these numbers don't begin to get even higher because this starts to put pressure on the bonds market, which controls our interest rates. So what happens is the economy is starting to recover. Less people are still back to work. We've got a total of about almost 30 million on unemployment or out of work right now. And so when people are out of work, this puts a lot of pressure on the supply chain because they can't deliver goods as easily. And when they can't deliver goods, there becomes a scarcity. The prices go up. As those prices go up, we have inflation. So this is something that economists are really looking very closely at. So what does this mean for us in the real estate world is that basically longer-term bonds feel the pressure of this because the inflation erodes the purchasing power of those fixed returns. And how do they compensate for that erosion is they raise the rates. And so message you want to send to your buyers right now, if you are on the fence about refinancing or buying a house, get your documentation into us, get your application moving because rates could increase. If they're waiting for a lower rate, we may not see lower rates again for quite a while at this point. Some of the ways they can benefit from this, though, is they can take a lot of their debt. We can close that all out at a closing. If they wanted to do a refinance, we could do the same thing as well. If they do cash out refinance, they could make improvements to their home and pay off debt all at a much lower rate than they would have even a year ago. So something to consider, ways to at least inspire your buyer to get ready to move on to the next property because now is the time, folks.